As the Iran conflict escalates, global markets are facing heightened volatility, with energy prices climbing, major stock indices wobbling, risk aversion rising, and investors reassessing inflation, growth and supply concerns. Many markets may need time, of course, to fully digest the economic implications of the conflict and how it's reshaping financial dynamics around the world. Let's bring in David Scutt now from Stonex. Good to see you. Obviously a huge week, and markets, what a weird day Tuesday was.
Aaron, great to be back. Yeah, the whole week has been quite strange. Just records coming here, there, and everywhere. In a normal circumstance, it would be headline news, but we just can't keep up. Just the sentiment flips so violently from one moment to the other, and it's all driven by the headlines, all driven by narratives that are changing by the hour.
Yeah, very much so, and oil prices obviously surging as well. That was the obvious problem that there was going to be with the Strait of Hormuz there and 20% of the world's energy supply. What's happening with energy prices at the moment?
Look, for the time being, they're obviously a lot higher than what they were this time last week, but they haven't managed to advance any further beyond those kind of levels that we saw immediately upon the market open on Monday. So just looking at WTI, currently trading around about just around $75 a barrel. Brent is a little bit higher at this point in time, but still around $81 per barrel. If you go back to this time last year, that's actually around about the same kind of level. So it's not like we're seeing this huge dramatic increase over the longer run, but just obviously over the last couple of weeks or so, there has been a big uplift. That's the key thing that's really helping markets to go and hang in there at the moment. There is clearly a belief out there amongst all different traders, investors and the like, that whatever's happening in the Middle East is not going to be a long run drag in economic activity. And we could see that with the market reaction to the data last night and just how buoyant risk appetite was.
Are you surprised by that?
Look, I've been around this game for a long time now, decades and decades, and I've seen a lot of crazy stuff. Am I surprised by it? If you asked me about probably 20 years ago, I would have said yes, but no, not at this point in time. I know that liquidity in the market really is the key influence here. And what we're seeing at the moment is that any weakness, this wall of liquidity is just waiting there to go and absorb the offers and just ram it back higher. If you go and look at just some of the assets that you'd think would get really hammered in this kind of environment, Bitcoin was up close to 8% overnight. The S&P 500 is almost back to its levels that it was last Friday. So all these things that you'd expect would get really hit hard, they're not. Technicals are still being respected, and whenever you see any weakness, there is always willing buyers. And until that mindset changes, until markets keep trying to go and seek out good news rather than cling on to bad, I think that's the way we're going to be playing it.
Is that because markets have faced so many ruptures over the past few years, from COVID to Trump's tariffs, obviously, and they've just gotten so used to things that now a war, potentially the start of World War III, some say, kicks off and markets say, well, we've seen this before. What do you think?
They say dip buying opportunity. And you go back to the pandemic, you mentioned what happened then. And look, we saw a huge increase in money supply that came through there, lots of income, and that has all gone out into the markets. It's all so sloshing around. And I think that's an environment that a lot of investors, a lot of traders who are getting frustrated that we don't see any meaningful price discovery, no meaningful pullbacks any days, are kind of forgetting that. So you have all this money that's looking for a home at this point in time. And when you get opportunities to go and buy in at a cheaper valuation, the vast majority of people, that is the mindset. They say buy in now. They know the government backstop is likely to go and be there. They know that Trump, when things get really rough in markets, has a habit of going and tacoing, walking back what he's been up to go and cause it in the first place. You put that all into the mix, and it's not surprising the slightest to see that even the smallest dips at the moment are still being bought.
It's interesting because we see, these pictures here of a submarine, the first time the US has sunk a submarine since World War II, and still the market goes up. It's a fascinating time to be alive.
It is, and the dramatic vision and everything else, and we know that it's a really serious situation. But again, that's not what the markets are really focused on. Markets are forward-looking. They're not looking about what's going on right now. They're looking about what potentially could be coming down the pipeline. If this is resolved in a manner that clearly is being favoured right now, it probably points to lower energy prices. It probably points to the likelihood that we're going to have the potential for lower interest rates, lower inflation. And that's what markets are clearly looking for right now. And then on top of that, you're seeing some pretty decent economic data coming through in the States as well, which is really helping to alleviate some of those concerns out there that were around last week about a potential something worse than a hiccup when it came to the economic activity.
All right, we got a new Fed chair finally officially announced by the president as well. But central banks, no doubt, must be watching very closely, particularly the price of oil and the impacts that it will have on inflation.
They are. And the real common thing that we're seeing around most parts of the world over the past week, and particularly since Monday, is that we're seeing this curtailment in anything where it was markets expecting to go and see central bank cuts. So that's particularly in the United States right now. We're down to around about 40 basis points of cuts now that are priced into the US Fed funds curve. So that's a very, very small amount, about the smallest amount we're seeing so far this year. And there's almost no expectations for cuts in the first half of the year. I was just checking some of the other data before coming on air, and the probability of a rate cut by June is deemed about 36, 37%, which is incredibly low. So again, that's the market saying we don't think that what's going on right now in the Middle East is going to go and influence the Fed to go and ease aggressively. Of course, things can change pretty quickly, and it doesn't necessarily mean that the outlook for the economy that markets are grappling onto right now is going to end up being that way as well.
Yeah, let's talk about gold and currencies now. What are we seeing?
Gold had the typical reaction that you see initially, like a ripped higher on Monday, and it has been well supported, particularly around this 5,100 mark, which is a pretty key technical level. But when you look at the performance, it also has some attributes nowadays where it's not just a pure risk play, a risk appetite play. It also has been kind of like a momentum play as well. And so you get these rallies that are coming up, and then you're seeing all these other assets that are falling down. I suspect that what we're seeing is that some of that money is recycling out of the commodity space, the precious metal space, and going back into other markets like crypto. It's pretty notable that we've seen a big rally in crypto and other tokens as well, altcoins, over the past week or so.
Interestingly, Goldman Sachs' CEO saying that it could take weeks for markets to digest the economic impact from what's happening in the Middle East at the moment. Do you, I guess, think that that means that investors are just waiting and seeing and buying the dip, as you mentioned? What do you think the next few weeks will look like?
Mate, it really comes down to what happens with the Strait of Hormuz. That's the key sticking point. And we saw that earlier in the week, like the energy haves and have-nots. There was this big divergence in performance between markets where they're energy self-sufficient, like the United States, and markets that are heavily reliant on energy imports, like Japan, like South Korea, like many parts of Europe. For us here in Australia, of course, petroleum, petrol is a big one that we have to go and focus on, given the very lack of refining we can go and do here. So that's going to be the key thing. What happens with that strait? How quickly can you go and see flows of energy normalize through that strait? And will that go and happen? The longer we have these disruptions, and I know Donald Trump is talking about offering reinsurance to try and encourage ships to go through and have military escorts. But I tell you what, if they do that, they're just going to go and have a whole bunch of drones and missiles being sent straight towards those ships. So that is going to be the key sticking point. At the moment, markets are saying, well, we're likely going to see some kind of resolution in the near term. But if that goes and drags on into weeks and months, dare I say, then it's going to be a real issue for the global economy. How do you go and get that energy to those parts of the world that are so reliant upon it?
Yeah, just quickly, we've got about a minute left, but the world's been worried about low growth, higher prices, weak demand, particularly in Australia. Does this help or hinder that?
At the margin, it hinders it a little bit. Certainly, the near-term prospect, if you go and look at any of the petrol stations, remarkably quick to go and lift petrol prices. I've seen in Sydney and parts of Adelaide where I live, already back to $2.20 a litre. That just simply doesn't reflect the lag time. So it's going to be a drag on spending. It's going to go and boost inflation. At the margin, yes, it's going to be a concern, but looking at the national accounts yesterday, yes, there was a bit of softness when it came through to the household sector, which may represent how electricity is calculated, but more broadly, mate, no. I don't think, unless it's going to be a really prolonged outage when it comes to oil supply, I think we're going to go and get through this okay.
David Scutt, appreciate your insights on Ticker as always. Thank you, sir.
Great to be here. Take care.